An upcoming economic downturn has been the talk of billionaires for some time. Bill Gates has seen massive success as the co-founder of Microsoft, and billionaires like him are preparing for the upcoming recession. Join us in today's video as we hear Bill Gates' take on the forthcoming recession and how to keep your portfolio up amidst it. In preparation for what could be one of the most significant economic calamities in civilization, Bill Gates has begun selling off his stock holdings. In addition to his fame as a CEO, Gates excelled in capital growth. Over the last 2 decades, Gates was able to amass $50 billion in wealth with the assistance of Michael Larson, who served as his investment manager. Gates and Larson reaped the benefits of the bull market while simultaneously laying the groundwork for the dot-com bubble that burst during the Great Recession of 2008. Because of this, he has been able to continually outperform the S&P 500 and take his wealth to a whole different level. Both Bill Gates and Richard Larson are currently making intensive preparations for what is expected to be one of the worst economic downturns in history. It goes without saying that the economy is struggling. Poor consumer morale, the Russian-Ukraine conflict, low savings rates for consumers, and record debt levels are all contributing to a worsening of the US economy. 2021 was a year in which the federal government put trillions of dollars into the economy. It's a full reversal in 2022, whereby the government is taking trillions out of the economy. Particularly concerning to Gates is the artificial net that the Fed has set for themselves. The economy is presently being stabbed by a double-edged sword. One side of the blade is represented by the quickening pace of inflation, and the other side of the blade is represented by the enormous amount of government borrowing. The government is currently faced with a choice between destroying the US dollar and crashing the economy, with the latter option carrying the risk of bursting the debt bubble. The Federal Reserve has made the decision to implement option 2, which involves slowing the economy despite the possibility of an extraordinary collapse. Recent events have resulted in a rate hike by the Federal Reserve of 75 basis points, which marks the most significant increase in rates since 1994. This increase has a significant impact on reducing inflation, but it also carries a significant danger. To begin, a major increase in interest rates will result in dramatically increased financing expenses for both commercial ventures and residential mortgages. Recently, interest rates for mortgages with a 30-year fixed rate experienced their greatest one-week spike in the past 35 years. If the current rise in interest rates causes an excessive amount of economic slowdown, it has the potential to burst the bubble of debt that already exists and send the economy into a recession or collapse.
So since we last talked, small thing has happened. Russia has invaded Ukraine, and it feels like we're in a new world. We are going to be seeing higher energy prices, higher food prices for years to come. It seems difficult to see how this resolves itself very quickly. What does that say to you about the economic outlook for the next few years?
Well, it comes on top of the pandemic, where government debt levels were already very, very high, and there were already some supply chain problems. And so it's likely to accelerate the inflationary problems that rich world economies have, and force an increase in interest rates that eventually will result in an economic slowdown. So I'm afraid the bears on this one have a pretty strong argument that concerns me a lot, particularly because the poor countries, whenever the rich countries have these big budget problems, the health needs of places like Africa get deprioritized.
Gates's bear hypothesis is logically consistent. There is a significant link between rising oil costs and economic downturns. US economic recessions are marked by the gray regions in this graph's timeline. It is clear that whenever the price of a barrel of Brent crude oil goes beyond $100, a downturn will almost certainly follow. The current price of Brent crude oil, approximately $120 per barrel, is a leading indicator that a crisis is on the horizon. Because the increased price of oil is essentially a tax levied against customers, a downturn in the economy usually follows when oil prices top $100 per barrel. When gas costs are high, people lose money right away. Additionally, this harms the consumer's mood and reduces their purchasing power. According to the Consumer Sentiment Index published by the University of Michigan, consumer sentiment is presently at its lowest level since the beginning of the crisis in 2008. The economy moves in cycles, with debt levels continually reaching their highest point and then falling to their lowest point in a cyclical fashion. Both Gates and Larson are aware that the years leading up to 2021 were marked by a great deal of conjecture. It's going to be the total reverse of this, an enormous economic downturn. Gates and Larson have been employing a number of different hedging tactics as part of their anticipation of a crash in the stock market in the United States. Stock shorting is among these methods. Short positions, in contrast to long ones, are exempt from the requirement that they are declared to the general public. By introducing a new plan, the SEC is attempting to change this. In the meanwhile, we don't know whose companies Gates is shorting. Having said all of that, the fact that Gates has a short position in Tesla stock was disclosed by Elon himself, so we are aware of this fact. Gates prides himself on being a fervent promoter of environmentally friendly technologies. Musk, however, contends that his short Tesla position contradicts this. Since Gates still has a multi-billion-dollar short position against Tesla while claiming to help the global warming, I guess I have some trust issues with him too, Musk wrote in a tweet. Even though Gates has already lost more than $1 billion on his short position in Tesla, it is obvious that he has not yet closed out his investment. It was $500 million, but then Tesla went up a lot, so now it's $1.5 billion to $2 billion to close it out, Elon remarked. There was going to be a meeting between Bill Gates and Elon Musk to discuss philanthropy, but released text reveals that Gates' short position in Tesla prevented the meeting from taking place. Gates texted, 7:20 on Wednesday to be clear. Elon answered, great, in response. Then Gates informed Elon that he had just arrived. Cool, do you still have a $500 million short position against Tesla? Said Elon. Gates said, sorry to say I haven't closed it out. I would like to discuss philanthropic possibilities, acknowledging that he had a short position. Musk noted that having a short position in Tesla stock isn't exactly a closely guarded secret, and he acknowledged that the texts that were released were authentic. Therefore, the price of Tesla stocks increased significantly in 2021. The meteoric ascent of NFTs marked the peak of the bubble. NFTs, such as the Bored Ape Yacht Club, saw their value increase by hundreds of percent before seeing a significant decline of more than 80% in just 2 months. Ethereum's long-term potential is undeniable, but there is no justification for ape photographs to be worth hundreds of thousands of dollars at the moment. Gates has recently voiced his dissatisfaction with the Bored Ape Yacht Club due to the lack of value.
Bill Gates had this to say on the sector.
I'm used to asset classes where, like a farm where they have output or a company where they make products. Have an asset class that's 100% based on sort of greater fool theory that somebody's going to pay more for it than I do. And where it has at its heart sort of this anonymity that, you avoid taxation or any sort of, government rules about kidnapping fees or things. Yeah. Anyway, I'm not involved in that. I'm not long or short any of those things.
And there you have Bill Gates, of course. TechCrunch, the sister publication of Yahoo Finance. And good for Bill Gates for keeping it real right now. He's been, I would say, not a big believer in crypto. And
even as we are shooting this video, the S&P 500 is currently trading at a greater level than before the financial crisis of the pandemic. Since the economy was in much better shape before the pandemic struck, Gates does not see any reason why that should be true. Both the demand and supply sides of the market were experiencing robust growth. The pandemic has a significant negative effect on both the customers and the businesses that supply their goods. We can't simply get the economy back on track by increasing the money supply. The pandemic's economic consequences are still widely felt.
Well, I think it's very difficult when you have a lot of people dying of a disease that even if the government says, okay, let's keep the GDP reduction down, the behavior of people in terms of wanting to travel or go to events or even go to a restaurant, it's been utterly changed by the concerns about this disease. And so until we can say to people that we're tracking this thing so well that actually going out to your job, to a car factory, to a construction site, that those are safe enough that we feel confident you can do those things. Until we get there, which we're absolutely not, no one should think the government can wave a wand and all of a sudden, the economy is anything like it was before this happened. That awaits either a miracle therapeutic that has an over 95% cure rate or broad usage of the vaccine. And so, we've had a demand side shock and a supply side shock. And that demand side piece is both mediated by fear of infection and by the overall wealth effects of many people losing their jobs, and entire industries will be operating at a far lower level than in a normal economy.
In contrast with the precarious nature of the current economic climate, Gates also believes that the pandemic has not been contained. Gates warned the Financial Times that there is still a chance that this pandemic might evolve into a version that is considerably more deadly and contagious. It's not likely. I don't want to be a voice of doom and gloom, but it's way above a 5% risk that this pandemic, we haven't seen the worst of it, Gates stated. In addition to rising inflation and debt, we now face a pandemic that could worsen. When taken together, all these elements put the United States in danger of experiencing a terrifying economic and social disaster. Although Gates referred to producing assets as his area of expertise in the context of investment, the reality is that he has been selling his assets. His most recent quarterly statement, which covered the first 3 months of 2022, disclosed that he had sold millions of shares in several different companies. Among the many equities mentioned was Berkshire Hathaway, worth over $1 billion, Caterpillar, worth $500 million, and a slew of others. We need to examine Michael Larson's approach in detail to comprehend why Gates is selling his holdings. Larson is in charge of everything. In the realm of finance, the term alpha refers to the risk-adjusted return, and he is fully aware of all the ways in which alpha can be optimized. According to individuals close to Gates, his net worth went down by only a very tiny amount during the economic downturn that began in 2008, despite the fact that the market suffered a massive drop. We are aware, based on public records, that Larson follows an investment plan that is very similar to that of Warren Buffett. However, Larson has chosen to keep his strategy hidden. If we examine the investments that Bill Gates has in his portfolio, we can see that the majority of organizations in it are not likely to be affected by shifts in the economy. One example of this would be the waste management stock that Bill Gates holds to the tune of $3 billion. Simply because the stock market is down 50% does not mean that people are going to start littering. Diversification into different types of assets is another element of Larson's overall plan. Due to two factors, high alpha and diversification, Gates is the largest private owner of farmland in the United States. From 1991 through 2018, farmland consistently generated a return of above 11%, with not a single year ending in the negative. This is due to the fact that, even in times of economic hardship, individuals would continue to consume food. Farmland can therefore have a high alpha since it provides large rewards while having very little to no negative impact. In addition, Larson has a reputation for investing in non-traditional assets like private equity, which entails acquiring privately held businesses. Private equity is another type of investment that, like farmland, is typically inaccessible to individual investors such as you and me. On the other hand, for Gates, investing in private equity is an excellent method to further diversify and hedge his portfolio. What do you guys think of Bill Gates' point of view? Do you guys feel the same with NFTs? What do you think is the safest investment right now? Comment your insights in the comment section down below. If you enjoyed this video, please like and subscribe, and we'll see you on the next one.